Here is Ticky Fullerton on Your Money.
Hello there, I'm Ticky Fullerton, every night bringing you a full hour of the very best in business coverage across the nation and internationally, especially where business and politics meet. Coming up, Bank of Queensland annual results please the market, but will Chief Executive John Sutton's plan to offload the insurance business to Freedom Insurance, which is on the ropes after a battering at the Royal Commission, actually go ahead? Our interview coming up. Prime Minister joins Britain to step up pressure on Russia, condemning it for broad-scale cyber attacks. We talk to BT Security's top chief, who's in town today, about how damaging cyber is wreaking its effect and what business and consumers can do about it. And economist Paul Sheard, normally based in the US, joins me at the desk for his take on where business and politics is meeting in Trump's America and Theresa May's Britain. Cybersecurity, it sounds dry. It's anything but we're in a John le Carre world, I think. According to Mark Hughes, the boss of BT Security at Britain's largest telco and internet service provider, it costs you and me and business $120 billion a year, much of it down to criminal individuals. He's in town today, as I say, and he's been in deep talks also with the government in Canberra about what can be done to counter cybercrime, both economic and political. Well, overnight in Britain, Foreign Secretary Jeremy Hunt accused the Russian military intelligence unit GRU as being behind a fresh wave of global cyber attacks against political institutions, businesses, the media and sports. Britain's already outraged by the poison attacks on Sergei Skripal and his daughter by those two supposed Russian tourists. For those of us that can remember poison-tipped umbrellas in airports, the whole thing has come full circle. This new high-stakes game of hacking and influencing politics is a worldwide problem. Just look at the drama it's causing with the Mueller investigation for Donald Trump. Now, back in Australia, with an election within 9 months of his own, Prime Minister Scott Morrison was at one with his British colleague.
The online environment is not the Wild West. We're going to call this stuff out, and that's what we've done today. That's what other countries like the UK are doing. It's not on. And as an international community, we need to send that message very, very clearly. We're not going to cop it.
Well, there are many insidious forces within cybercrime, but what's also interesting is a new organisation called Intrusion Truth, a sort of vigilante group, if you like, which has managed to hack the cyber hackers and in one case tracked two individuals right back to China, even reportedly tracking their Uber receipts to where they live. Just who is behind Intrusion Truth is unclear, but there's certainly suggestions that big business could have a hand in it all. Well, coming up, our special interview with BT Security's Mark Hughes. Well, let's go to the full-year result now, and it was a bit of a profit hit at the Bank of Queensland. The final net profit after tax numbers coming in at $336 million, down 5% from last year, and just around estimates. Cash earnings also down for the period. The $372 million result off by 2%, but that result beating out median market expectations. Looking ahead, and the bank is confident in its divisions despite headwinds, with CEO John Sutton saying what's particularly pleasing is the acceleration of growth we've seen across our niche segments and Virgin Money Australia. The Bank of Queensland is paying a dividend of 38 cents per share for the period. And for more on those results, I spoke with Bank of Queensland CEO John Sutton. John Sutton, will you beat expectations? I think the market liked it. What underpinned this better than expected result?
Well, thanks for having me, Ticky. What really pleased us about our result was particularly the growth that we're seeing in our niche businesses in BOQ Finance, which grew at $250 million. Virgin Money's had a very, very strong year again, $1.9 billion now in home loan growth over the last 2 years since we launched that product. And also we've seen some really good growth across some of our commercial parts of our business as well.
So your NIM, your net interest margin going forward, you managed to improve it. What are the challenges there?
Well, we saw a 5 basis point improvement over the last 12 months. NIM is always difficult to predict because there are so many moving parts that make up the net interest margin, and whether it's offshore funding costs or whether it's deposit costs versus the asset price side. We did talk about the various moving parts, and it's difficult to be able to give real firm guidance around what the outlook for NIM is. But what we are doing, though, was pleasing with our result, was we are managing our deposit side. So our term deposit pricing is coming down a little bit. We're using data analytics to manage that better. But more importantly, what is the lifeblood of any bank is the low-cost deposits that come through our customers, and our branches have done an excellent job in actually growing our customer deposit base.
One question from an analyst today was, given that the Royal Commission has given the Big Four such a hammering, perhaps he was looking at a bit of a stronger performance at your branch level.
Well, I think there's a lot of things that are playing out there at the moment, and if you look at where BOQ was 4 or 5 years ago, it was a monoline distributor of mortgages. BOQ has materially changed its business mix. If you looked at the results today, some 60% of the profit contribution comes from BOQ business, which also has the BOQ specialist business in it, which looks after the needs of the doctors and dentists that we actually have. So when I think about our business, we've got many parts of it are growing, and obviously our branch network is really, really important to us. They did moderate the reduction in home loan growth that we've had in the past, so they are improving, but more importantly, they're also gathering those vital deposits that we need.
How do you think you're going to go against the Big Four banks as a result of the Royal Commission? Because there's no doubt you're going to have greater regulatory costs, and there's no doubt that on the digital fronts your costs are going up.
So we will manage our costs within the cost envelope and the capital that we have. We announced a 7 basis point use of that capital. Our CET1 is at 9.31, very strong for a standardised bank. We're very excited about the prospects of investing in the future for Virgin. We're very excited about getting digital parity for our Blue brand, and also what we're doing for our single view of customer. I actually believe we have a very simple business model. We're a retail bank and a business bank. Can get much closer to our customers. We don't have the distraction of all the vertical integration that these large banks have, and we can get on with our business, and our results demonstrated that today with the growth that we've actually had, particularly in our business bank. You
say you don't have the distraction of the vertical integration that the Big Four are trying to get out of, but you too are trying to get out of insurance by selling St Andrews. Now, you're trying to sell it to Freedom. That has hit something of a roadblock, again, as a result of the Royal Commission. Now, Freedom is having a terrible time. Its share price has plummeted. It's now lost its chief executive officer. Now, the acquisition, what Freedom wanted from their point of view, of course, was the APRA licence. Now, why would APRA grant Freedom a licence, and therefore why would this go through, John?
Well, you can appreciate I can't really talk a lot about the transaction. We do have an agreement with Freedom Insurance, and it also is dependent on regulatory approval. And if there is any change to that, we'll certainly inform the market. But that is about as much as I can say on that at the moment.
But if you were not able to put through the transaction, presumably St Andrews would still be on the sale block, would it?
Well, again, I can't say any more than what I've said about that transaction, and we'll need to see how that plays out. Overall,
the Royal Commission for you, do you feel you came out of it relatively unscathed, at least compared to the big banks? I mean, you were picked up on the business lending side, I think.
Well, I certainly think that the Royal Commission has cast a spotlight on what have been some unacceptable practices across the industry. The industry absolutely needs to own it, and in our case, where there was a case study, we actually own the shortcomings that we actually had there, and we are looking to put its systems and processes in place to improve what we've had there. We do feel, with the results that we've produced today, we're very, very focused on growing our niche businesses, whether it's Virgin Money or whether it's in BOQ Specialist, BOQ Finance, and our branch network. Simple model allows us to be closer to our customers and allows us to grow. And certainly some of these very large financial institutions that have vertical integration that are currently in the throes of changing their business models will certainly have their hands full, and we need to make sure we stick to what we can do really well and get close to customers.
And you're confident of the quality of Virgin Money?
Very confident. It's a great brand. It's a global iconic brand. We've shown up in a very short period of time that it does attract materially different customers to what we would attract through the normal BOQ brand. It tends to be more professional customers based in Sydney and Melbourne, the metropolitan capitals. There is a demand for further products from that customer base, And we're very excited about the future development of Virgin to become a full digital bank in the future.
But in terms of the scrutiny of the process that Virgin Money has in place, you're comfortable?
This is something that I'm very passionate about. Right across BOQ Group, we validate 100% of all of our mortgages. It doesn't matter if it's in Virgin or BOQ Specialist. We're very mindful of our responsible lending obligations, and we want to ensure that our customers, regardless of what channel they go through, even if it's through a broker, can actually afford their loan. And we've made great inroads in doing that, and it's quite clear from some of the industry reviews that have come out that others have quite a while to go on that.
John, what do you think of Commissioner Haynes' interim report? You must have gone through it. How serious is it going to be for many of the players?
I think it's very serious for the industry. The industry needs to look hard at itself. It needs to understand its purpose, and the purpose that the industry has, particularly in banking, is to take depositors' money and look after that, and to provide credit and transmit the credit to enable Australians to fulfil their dreams, whether it's their first home or their investment home or it's their small business. And the industry's been found wanting in key areas. The industry needs to take this very seriously and need to move forward. I'm sure there are plenty of open questions that the Royal Commission has left on the table, and they will be answered in the interim report. And I'm sure that there'll be further regulatory change.
Do you think some business models will literally go?
I'm not sure about business models literally going. I think you're actually seeing the industry already get ahead of the curve in adapting their business models to be much more simpler. And we are a simple business model, so we're going to concentrate squarely on our customers and the segments that we're in.
One of the consequences of the Royal Commission, and indeed other prudential moves, has been this so-called credit crunch. What do you think of this credit crunch? Presumably it'll have an impact on banking?
I actually think it's a little bit over the top to describe a credit crunch. That's sort of referring back to the 1960s, and I don't think we're in that space. I think what we are in is ensuring that people borrow responsibly, that they get their loan that meets their needs. And I think the Australian economy is in good shape at the moment. We've got great growth at 3%. Unemployment is low. So I actually am quite optimistic about the future of the industry, and I don't subscribe to a massive credit crunch. I think is it incumbent upon regulators, bankers to ensure that that doesn't happen, and I don't see that happening.
And you've got an announcement around Harley. This results, you're financing Harley in Australia. I think you took that off Westpac. That must be quite a coup for you.
Well, our business, BOQ Finance, is a partnership business, and in fact we've had a long-term relationship with Honda Motorcycles as well, and we're very proud of the Harley relationship. But again, it's just an example of what we focus on, what we can control, and how we can be close to those customers and the service that they receive for those iconic brands. And BOQ Finance is a bit of an unsung hero within the group. It's been around for a long period of time, but it's there every day providing equipment finance to small businesses.
Well, just on funding for small businesses, I was talking to the industry super funds about their idea of wanting to lend directly to business, and they have a lot of money. They were talking this week about using some banks possibly as intermediaries in this process. Would that be something that Bank of Queensland might be interested in?
Absolutely. BOQ has a lot of partnerships. We talked about Harley and we talked about Honda. We'd more than welcome the prospect of partnering with industry super funds in provision of credit. We've got great credit skills, our credit metrics are in good shape, and we do understand the needs of small to medium-sized businesses very well.
And do you think it'll take off, this idea?
It could possibly take off. There's plenty of money with asset managers that are looking for a home, and credit is a part of any asset allocation and portfolio, but we'd be more than happy to work with industry super funds in that regard.
John Sutton, great to talk. Thanks very much.
Thank you, Ticky.
And we'll be more than happy to follow that story. Well, now a costing clash has erupted over Labor's plan to give 3-year-old children 15 hours of subsidised weekly care at preschool. The opposition says the commitment is fully costed. Government believes the numbers don't add up and is accusing Bill Shorten of hiking taxes to pay for their preschool push.
at the preschool he once attended.
I'm an alumni.
Can you imagine him as a baby?
Bill Shorten vowing to make childcare more accessible for the next generation of babies.
If we give our 3-year-olds and 4-year-olds access to preschool education, then we are giving them the best jump start to school.
Labor plans to lock in 15 hours per week of subsidised childcare for 4-year-olds and extend the program to 3-year-olds starting from 2021.
On top of what's already been budgeted, we would fund an extra $1.76 billion. Over 10 years, the Parliamentary Budget Office, the Independent Parliamentary Budget Office, has costed our 3-year-old preschool universal access guarantee at $9.8 billion.
Every time you hear Bill Shorten saying he wants to spend more money, know that you're going to pay for it with higher taxes.
Part of the $1.7 billion extra that Labor is spending on childcare comes from the opposition pledging to lock in funding in the budget. Currently, subsidised childcare funding is set to run out at the end of 2019, but the Coalition maintains its commitment to childcare is absolute.
We've been committed to the universal access for preschool through the last 5 years. We've done that every year in government. And we've extended it out to the end of next year.
The Coalition has already extended funding on a year-on-year basis 4 times, and it's likely to be extended again. Labor, though, wants to put it in legislation.
Australia's preschools and Australia's parents deserve the certainty to know that this program will be locked in.
One certainty that is already locked in. The childcare debate will run right up until the next election. James O'Doherty, Sky News, Canberra.
After the break, talking Brexit, China trade tensions and the new US CMA with former VP of S&P Global and ex-Lehman Brothers chief economist Paul Sheard.
You're watching Ticky on Your Money. Now, back to Ticky.
British Prime Minister Theresa May has delivered an upbeat message telling a Conservative Party conference to look forward to better days ahead. Her speech was aimed firmly at voters in towns and cities tired of austerity and wanting a conclusion to the Brexit process.
Big speeches need bold moves, but never quite like this. Channeling ABBA's Dancing Queen with her trademark mechanical jig, A Little Brave. The Prime Minister not noted for recently having the time of her life. But the Tory faithful loved their self-deprecating PM and her message of a bright Brexit future if the party unites.
If we come together, there is no limit to what we can achieve. Our future is in our hands.
And then a claim to unite the nation too.
Let's make a positive case for our values that will cut through the bitterness and bile that is poisoning our politics. And let's say it loud and clear. Conservatives will always stand up for a politics that unites us rather than divides us.
Throughout the speech, some of her most loyal aides seeming a little teary. But this pitch for her post-Brexit domestic agenda only relevant if she is PM after this immediate and fundamental challenge. And at first, the familiar rhetoric.
Britain isn't afraid to leave with no deal if we have to. But we need
applause, but the PM's actual point was different, that no deal could risk hundreds of thousands of factory jobs.
But we need to be honest about it. Leaving without a deal, introducing tariffs and costly checks at the border would be a bad outcome for the UK and the EU.
On this speech, at least, the Cabinet united.
I think it was fantastic, very optimistic.
Is it Dancing Queen or is it SOS? I thought it was great that she feels comfortable in her own skin as a person as well as a leader to come onto the stage brimming with energy.
The letters stayed up, the cough sweets left in their packet. They did nearly trip, but this was a moment of catharsis for a Prime Minister who is not backing down on her Brexit plan. Faisal Islam, Sky News in Birmingham.
So where to now for Brexit? Well, talking Brexit, global trade and the economic situation 10 years on since the GFC. I'm pleased that Dr. Paul Sheard, former VP and S&P Global and ex-Lehman Brothers chief economist, joins me now. Now, Paul, it's great to have you there. Let me take you back, though, because you were in a very, very special situation, weren't you, as chief economist at Lehman Brothers there. What was your GFC like?
Well, it was an interesting one. That's certainly the case.
Yeah.
Ticky, I guess actually, as as an economist, I was really more focused on analysing what was happening, and it was a strange situation where the company that you were working with actually became part of the macro economy. So that was a rather, perhaps a different situation for many people who were perhaps taking the whole thing a bit more personally. I
mean, it's extraordinary to be sitting sort of in the eye of the storm there. What do you see as the lessons learned from it? And indeed, are we looking at worrying situations around the world which could point to another one?
I think broadly, Ticky, two big lessons really were try not to have a financial crisis in the first place, and I think since the crisis, there's been a lot of effort put into that. Obviously, macroprudential policies, capital adequacy ratios, Basel. 3, etc., all that stuff. The second lesson, though, is important as well, which is if you do have a financial crisis, make sure that you have a toolkit ready to deploy, lender of last resort facilities, the ability to quickly recapitalize banks if they're teetering on the brink, etc. So have the fire brigade ready to put the fire out, but make sure you don't have one in the first place.
I was going to say the fire brigade doesn't have a lot of water, though, does it, at the moment? I mean, if you look at the central banks and the cushion that it's got.
Certainly in terms of conventional monetary policy ammunition, that's a concern obviously with many central banks still near the zero bound or doing quantitative easing. The Fed now has put a little bit of distance between it and zero interest rates. But I'm thinking more in terms of the old classic lender of last resort facilities. Central banks do have the ability essentially to inject liquidity or new central bank money into the system in an unlimited way. But the other part of the picture there is the recapitalization, and that's typically not very popular. Economists will point to it as being very necessary. In the US, the TARP, the Troubled Asset Relief Program, was sort of the killer app in quelling the financial crisis, but that tool actually has been taken away in the US, and it would be quite difficult to put it back in place. So I think there's a little bit of structural vulnerability in the ability of the US in particular to cope with another sort of September 2008 situation. Fortunately, however, it doesn't look like we're looking down the barrel of that kind of situation in any shape or form at the moment.
Paul, here we famously, of course, avoided the worst of the financial crisis and others since. You've probably been looking on from afar at the Royal Commission, the interim findings. What we are seeing now is the unwinding of vertical integration. Do you think this will make a safer banking environment?
I haven't looked really closely at that report, Ticky, so I'd probably defer to make too much of a comment. But again, I think the lesson for Australia obviously did very well through the GFC to a large extent because of China, and really benefited from China's massive stimulus program. When you look around the world today at potential major trouble spots where something could blow up, China has to be near the top of the list. So I think the key point for Australian policymakers is to really make sure that they're thinking ahead and think in a sort of a scenario basis. Do they have the tools? I mentioned them before. And are they ready should they need to use that ammunition? I think that's where, certainly from a crisis prevention point of view, that needs to be the focus.
We've all seen, we've all been watching this ratcheting up of the trade war between the US and China. Donald Trump is demonstrating he's not a protectionist in that he's managed to do a new NAFTA. But should we worry about how far and how damaging this trade war can be with China?
I think definitely people have to be worrying, have to be paying attention to this. I would really put it more in a sort of a cup half full perspective, in the sense that, as you mentioned, Donald Trump doesn't seem to be really an ideologue on these issues. He is staking out a new position for the US and saying, look, don't look to the US to provide the sort of consumer of first and last resort, as we did in the past. We want to take a harder look at these trade deals, and he started with NAFTA, obviously pulled out of the TPP as well. But he seems to be very flexible. I don't think, if you look at the NAFTA, the so-called NAFTA deal, it's really a USMCA.
Yes. Very uncatchy.
You know, it's very uncatchy. It doesn't roll off the tongue. But you know, it's not a huge shift from the previous NAFTA. It's really you know, kind of tidying it up and introducing some new elements, and you know, a little bit around the edges. So I think that Donald Trump on these trade deals is prepared to sort of declare victory and move on, but he has to, you know, have something in front of him that says, you know, I've actually got something.
How do you think the US economy is going to travel? I mean, there are people to say, who say, look, actually, if this goes on, this US-China trade dispute, it's actually going to hit back home in the US and hurt Donald Trump down at the grassroots level. But do you think that will happen before the next US full election?
Well, the big one, of course, is 2020 for the president. So there's you know, 2 years. A lot can happen in 2 years. You know, I think it's important to bear in mind that a couple of things on the trade front. One is, you know, why is this happening, and particularly between the US and China? And it's really because of a major report that the US produced, the USTR trade representative in March of this year, commissioned in August of last year on intellectual property. And really what the president is doing is taking the Chinese on head on an issue that, you know, many people have been you know, kind of complaining about for a long time, which is China plays a little bit rough and fast on intellectual property. And you know, the US is calling China out on that issue. And that's why the tariffs are going in place. The other ones, of course, on steel and aluminium are more around a sort of a national defense rationale. It's a little bit different. But you know, I think the key thing here is I think the Chinese should probably give a little bit of ground and allow the president to sort of claim a little bit of victory and move on, because it's not in either party's interests for this to escalate. And again, I think there is some justification, at least for the arguments that the president is making on intellectual property.
Now, who should be giving ground on Brexit, Paul? You've just been through there.
Right. Well, it's a very complicated situation, Ticky, as you know. You know, one of the points I've been making is this is not just about Britain leaving the EU. The EU itself, you know, is very much an entity, a political and an economic entity in flux. And so I think there's much more potential here for both sides to sort of do something, craft something that's in their mutual best interests. So far, we've seen the EU take a pretty tough line. But I think, you know, as we get closer to D-Day, which is March 29th of next year, I think they'll sort of come to their senses a little bit. On the British side, the problem is Brexit was framed as a 0-1 in or out, and out won by a narrow margin, but what exactly does out mean? It can take on a number of forms, and that's really where the very difficult sort of politics of crafting a Brexit solution that satisfies the Brexiters, and you're just not going to satisfy everybody. Some people want to stay close, others want to have a little bit more leeway. This is really where the political skills of the leaders really comes into play.
Yeah, and a no deal, how would that affect the economics there in Europe, between Britain and Europe?
You know, everybody, of course, I think if you asked any economist, you know, a no deal, a sort of a hard Brexit, the UK crashing out of the European Union, as it's put, it sounds pretty calamitous. I think that actually if you got down to the wire, Ticky, and you had something that looked like that, I think what you'd find is that the no deal or the hard Brexit actually became a sort of a deal-making process in and of itself, because they would have to deal with the consequences across a whole range of issues. They're just not going to all pack up their tents and go home. So I think the crash-out scenario is not really very realistic. It really describes more a way in which they do ultimately, maybe at the 11th hour, the 13th hour, get down to tin tacks and cut some deals. All
right, you're off to the IMF. What are the big issues going to be there?
Well, I think there's a lot of nervousness, obviously, about emerging markets, some of the hotspots around the world, and then I think there's going to be a lot of focus, as you were raising on this particular segment, on the trade issues, particularly between the US and China.
All right, well, go well there, Paul Sheard. Great to get your insights. Thanks very much.
Thanks, Ticky.
Now, after the break, how can you protect your business against the growing threat of cyber attacks? CEO of BT Security, Mark Hughes, next.
This is Ticky on Your Money, covering the big business stories.
Yes, welcome back. Well, Australia has joined with the international community, as we've heard, to condemn what is being called a pattern of malicious cyber activity by Russian intelligence. Sky News Canberra reporter Annalise Nielsen explains the attacks have targeted political, business, media and sporting institutions from around the world.
It's long been widely understood, but now the Australian government is naming names. Prime Minister Scott Morrison saying Russia's responsible for a series of cyber attacks that's caused indiscriminate harm to civilian infrastructure and millions of dollars of economic damage. Russia's military intelligence unit, the GRU, has been named as the agency attempting to undermine Western democratic institutions in a report from the National Cyber Security Centre in Britain. The GRU is the same agency that's been linked to the annexation of Crimea and the poisoning of Sergei Skripal. Australia now officially blames the GRU for a number of high-profile hacks, including one on the US Democratic National Committee in 2016 and another against the World Anti-Doping Authority.
For us, it's a significant step in order that we expose this kind of behaviour to the international community. We state by ourselves and also with partners that this kind of activity shouldn't go unheeded. It should be highlighted so that others can see that this kind of activity is taking place. So often in cyberspace we hear of things happening, and so infrequently in the past have we heard those actual patterns of cyber issues being attributed to a particular state or group.
The online environment is not the Wild West. We're going to call this stuff out, and that's what we've done today. That's what other countries like the UK are doing. It's not on. And as an international community, we need to send that message very, very clearly. We're not going to cop it.
While the government says Australia wasn't significantly impacted by the attacks, they've urged all businesses to ensure their security measures are up to date.
Well, cybersecurity had top billing at an Australia-British Chamber of Commerce lunch in Sydney today. CEO of BT Security, Mark Hughes, last year, he was talking. Well, last year, the British telco giant BT launched a major cybersecurity research and development hub in Sydney. And 12 months on, it has a team of almost 300 people across Australia. Back here in Australia to check on progress and knock off a few high-level meetings in Canberra, of course, Mark Hughes' brief runs from geopolitics to how to protect your own mobile phone. It's a pretty broad brief. I spoke with Mark Hughes a little earlier. Mark Hughes, great to catch up with you again. Tell me, what has BT been up to in the last 12 months since we spoke?
Well, it's been a really exciting time. I mean, the first thing is that we've announced that we're recruiting up to another 200 people into our cybersecurity centre here in New South Wales. We've done a deal with the New South Wales government where we've actually had a grant as well from the government to help us in how we look for some of the really rich talent that we're seeing, not just in New South Wales, but across Australia as well. So we'll be doing more outside New South Wales in the near future as well.
It's becoming more and more important, cyber, business-wise, but also geopolitically, all the way up to elections. We've had the Prime Minister comment on the latest intelligence around Russia today. There's an election coming up here. There could even be another referendum on Brexit. What do people like you, do when you look forward to an election?
Well, the really important thing is, from a national scale election type activity, is working out what risks there are and those types of organisations could pose to be disrupting or manipulating even a type of election result or process. And so really it starts with really understanding what could happen and how much of it is obviously electronic, how much of it is done online. Different countries approach these in different ways. So getting really an understanding of what are those key components in that infrastructure.
Because it's changed the power of countries, hasn't it?
Things like that happen, but in that election environment is making sure, understanding what could happen, and then putting the right controls in place to do that. And in most countries that involves not only the government understanding that, but those people like ourselves, national infrastructure providers in the UK, playing our part in ensuring that we work collaboratively with government to ensure that those risks are mitigated right across the place. But as you rightly say as well, things like power networks can also, we've seen that widely reported being intervened and disrupted as well.
I notice you've got another 250 million quid going into GCHQ and the MOD. You talked about criminals being behind so much of cyber crime. We've just heard about this new organisation called Intrusion truth. Now, what do we know about intrusion truth?
People have been outed, so to speak, and have been exposed. A couple of individuals in China have been exposed as being people who've been involved in state-sponsored activity. These are worlds where obviously things go on, and how much truth there is in that, there are reports on it, but I can't tell you exactly how much truth there is in any of that. But what I can say is that where this activity is ongoing, and that has been certainly widely reported, and the impact has been felt in many different countries, anything that can ensure that is reduced and that sort of harm can't continue is a good thing.
So recently here, the government has banned Huawei from taking part in 5G here. Now, I'm wondering, they've obviously been banned in the UK, similar things, and in the US. Why? What is the particular risk?
Well, the real concern is, for most countries, is that where an actor of some description or a company that is not working in the right way could interfere with that country's telecommunications networks. And that's what's at stake. And that's a very, very important thing. We rely so much on the services that companies like mine and many others provide in our daily lives every day. And so the risk here is specifically in the Australian example that you said about in the 5G networks, as they come and begin to emerge, that are there types of hardware that can be put into those networks that could have the potential impact if they were interfered with, where that service could then stop. And that is really the risk that is every country has to decide on its particular risks what to do about that.
You mentioned $120 billion a year that we're all losing out to cybercrime. What can companies do about this?
Well, they can do lots of things. So where they are certainly in the business-to-consumer market, they can make sure that they comply with regulations like the payment credit card industry standards and the European Union general data protection rules, and making sure they've got the right processes in place, that they implement the Essential 8, which is well known here as Australia, as those key things to be done to ensure that they can control that information, make sure it's not vulnerable and readily accessible, but accessible to the right people for the right reasons, where they want to go on and get about their daily lives. So companies can do a number of things. They don't have to do many things, but they have to do those very few things very well. And the Essential 8 guidance that's come out from the ACSC is fantastic guidance, and companies it's very readily accessible, get access to that, and then follow that and implement it really well. They'll be doing a lot to ensure that they're not the next target.
You talked about the importance of getting the right cloud if you're a business. Now, it appears not all clouds are equal.
Well, there are some very big names, cloud provider names emerging. Amazon Web Services, Microsoft Azure, and others as well, Google Cloud as well. And those organizations have scaled up massively and are very good at running very big infrastructure. And so the advantage that an organization can have by putting their IT workloads into those environments is that obviously they're buying into a huge resource that they on themselves on their own wouldn't be able to necessarily get access to.
But that means smaller players shouldn't have a part in that? Should we be worried about smaller players?
Not at all. Some niche players provide some very niche services, but it does stand to reason that larger players, obviously you get the economy of scale from there, and that means that you get better access pricing for organisations.
And safety? Is there a difference between big and small?
Not necessarily, no. There are standards here in how data centres and these types of services are run, and they have to adhere to those standards. But there's different economics and different factors that organisations need to consider on choosing the best cloud provider.
Mark, what has BT been doing to address some of the malware, some of the phishing that's been going on?
So in BT, we've launched an initiative that we call Active Cyber Defence, and we have a thing called our Malware Information Sharing Partnership, where we look to seek out that type of malicious activity in our networks, and where we can block it so that people who never ask for any of this stuff, and it's only there for one reason, which is to cause them harm, where if we can remove that from getting to them in the first place, then hopefully we can reduce the level of infection that some of our customers get from some of these really targeted, nasty campaigns.
How effective have you been?
Yeah, so we've seen some huge reduction over in the last few weeks alone. 200,000 individual different types of pieces of malware we've managed to get rid of. We've implemented some things about how mail is controlled, in the sense that so we can ensure there's a protocol called DMARC to ensure that mail as it arrives is genuinely where it comes from, and that has seen some big phishing campaigns they've been ground to a halt in various parts of the UK, which is obviously having a really positive impact, so that we don't get bothered by those emails which don't look right, and even if they look almost right, they're there really for one reason, which is to try and cause us harm.
Yeah. Cybercrime has emerged, obviously, because of the Internet of Things and because of all things digital. You talked about, though, the importance of human beings. Tell us about your take on the privileged user.
Yeah, so any organisation that is looking at how they can conduct a strategy to ensure that they control their information. In an IT environment, there are those users who have very high levels of privileged access, we call it. So those that have to, by the very nature of their job, be able to access a lot of systems at once, and be able to do administrative tasks on those systems. Now, not everyone who's involved in working in IT needs to have those access rights. So the key thing for any organisation is to ensure that only the right amount of people have the right amount of access.
So, do you know all your privileged users at BT?
I most certainly do. It's a really big thing for me to ensure that we know who those those users who have those high levels of access are, to ensure that they've got the right access to be able to do their job, but they don't have too much access when that's unnecessary. And I quote myself in this situation, I certainly don't have big privileged access rights because I don't need that to do my job. But those who do, and where they do, then we make sure that they have the right access, and that's controlled.
And skills, Mark, you were really interesting about the sort of people that you were looking for and that you would be prepared to actually go to them.
Yeah, so we look for very diverse workforce. In some cases, a corporate headquarters to go through an interview process. They might be really put off by that. Certain people who might be very expert in this field. So I have a team of people who actually go to their homes and will conduct or do that work in their own homes if that's what they want.
Interview them in their own homes.
Absolutely, if that's what they want, because to gain access to those really specialist skills, we really need to do anything we can, and not only just to gain access to the skills to start with, but once we've attracted that diverse set of skills, then develop individuals as well through training and through exposing individuals to lots of new different things as well, so that we can develop and then retain staff as well. So that's something that is really important to me and to our business.
Yeah, and going back to businesses again, how do we make sure our supply chains are safe?
Most organisations, large organisations in business, have a very long supply chain, lots of different vendors who will supply things in their procurement chain, if you want, or maybe in their IT infrastructure. They may have outsourced quite a lot of that activity. So having a good understanding of where all those activities are happening, where the work actually gets done, where the information is at any one time.
Is blockchain going to help?
Absolutely essential. Blockchain will certainly have a part to play in this, because that will allow organisations to understand where things are being changed, and there is certainly a big application for blockchain in the security world.
Finally, we're just about to open up our banking and data. Is there not a danger there in opening up to disruptors, new players?
Absolutely, there's a risk associated with that, and that risk needs to be thought about and managed beforehand so it can be controlled properly, because the upside is, of course, new entrance to the market, opens up the market, potentially comes up with new products and services for the market. We did. We've been through a process in the last few years where there has been a regulatory framework which has been instigated in the UK over the last decade or so, which has really opened up the market and created a lot of competition now and access to new telecoms operators that weren't there a few years ago. And part of that is making sure that that can be done in a safe way, and that the information is controlled properly and flowed around those different organisations in the right way. And certainly when it comes to financial services, that really has to be thought about to get it right, because the stakes are high if it goes wrong.
Mark Hughes, it's always so interesting talking to you. Thank you very much.
Thank you.
After the break, more gloomy data for the local property market, but are we forgetting about renters in the broader scheme of things? ANZ Chief Economist Richard Yetzinger.
Now, back to Ticky.
Welcome back. Moving to property now, and the latest monthly CoreLogic figures dropped earlier this week. Housing values have declined by 2.7% since peaking in September last year, marking the 12th month anniversary of the market correction. So, with mortgage rates on the rise and an ever-growing population, you'd admit the situation sounds fairly bleak. But how are we measuring the success of our property market? Well, to answer that question, I'm pleased to welcome ANZ's Chief Economist Richard Yetzinger. Richard, good to have you here.
Hi, Ticky.
Now, have I got this right? So we've got house prices coming down, but because of all the prudential moves and indeed the Royal Commission, I suppose, it's getting more difficult to get a mortgage. So what's been the sort of toss-up in the market?
Well, look, the issue is it is a toss-up, isn't it? I mean, I think people look at the fact prices are down a bit and say, well, that's a good thing. It helps affordability, and in a mathematical sense it does. But then it's not necessarily improving access if the driver of the slowdown in prices...
So are we going to get more people who are homeowners?
We might. In an aggregate sense, we shouldn't necessarily expect that, though, in the sense that Australia already is a very high home ownership nation from any sort of global perspective. New Zealand is really the only other economy that's kind of close.
We're trickling down, though, over the years, aren't we?
Home ownership has trickled down over the past couple of decades from exceptionally high levels from an international perspective to still very high levels.
So what are we now, 60-something?
67%.
67%, right.
Down from about 70. And I think part of the issue in Australia is we do tend to favour the owner and not the renter. So renting is not a great experience, actually. I mean, there was a small story in the press today about if you're a renter, actually, don't expect to have internet access to, you know, your place of rent, and if you do, expect to pay for that access to be built in. Whereas if you think about that, if we were serious about renting, we'd say actually the water needs to be on, the electricity needs to be on, and you probably need cable internet access as a reasonable expectation.
No, that's a very good point. I hadn't thought about that. Now, do you think, though, there is still this passion for the Australian dream to own your own home, or is it more like, could it become more like France or Germany, where people are quite comfortable not having a home at the end to leave to anybody?
I mean, it's interesting. We call it a dream when historically more Australians than in almost any other country have owned their own home. So actually it's been more of a reality here than anywhere else.
Yes.
I suspect that's not going away anytime soon, and it's not unreasonable that people have that expectation. I do think, though, we need to think about what situations the renter faces.
Well, the other thing is, but no doubt it'll never happen, is, you know, taxing the family home.
There are a whole range of tax issues, and we tend to get focused on one or two very big cherries and ignore the big picture around tax, but there are a range of tax issues which we need to confront pretty seriously.
Yeah.
We've seen a range of governments at different levels in Australia announce a serious focus on housing, and then with the next breath say, oh, we're not touching tax X, Y or Z, whether it's stamp duty or negative gearing or something else. The reality is...
Those are the two big ones, though. We do have in the opposition, I mean, if they became government next year, we could see changes
quite substantial changes on policy around
negative
housing.
Gearing.
Absolutely.
Yep, and that would presumably free up significant houses in the market, you'd think?
Well, it will probably add some supply to the extent, again, we're in a more credit-constrained environment appropriately for a whole range of reasons.
Yes.
The open question is who'll be available to purchase those.
Right, OK. And we can forget changes to land tax, stamp duty, that sort of thing, because really, I mean, New South Wales would have been the obvious candidate to do it, but they're not in quite the sweet spot that they were, so why would they do it now?
The good news is the ACT's led the charge. They're going through their transition to shift to, I think, a more sustainable form of taxation. Yeah. Hopefully they demonstrate some benefits and other brave governments take up the
How long do you think it'll take for that to start coming through?
I forecast for a living. I'm not going to forecast that.
Yes. Yeah, look, it's a tricky space, isn't it? It's a tricky space. Go on.
Look, I think the point is advocates of a whole range, whether they're in government or outside, often look for one or two issues and say, well, if we tweak these things, they're the magic recipe. I don't think there is. I think there's a range of issues, even around... People talk about infrastructure. The move to the service economy is a big issue. 50 years ago, half of Australia's workforce was employed in agriculture or manufacturing, which is actually quite a decentralised form of employment. You can live in Wollongong or Port Kembla or rural Australia. As we move to a more service-based economy, particularly as digital and tech's become more important, what are you noticing? Concentration of workforces.
Yeah.
In our major capital cities, that's an extra pressure here, I think.
That's going to come, just coming back to this point about getting access to online in your rental apartment, surely as the cities become more dense, this is going to become, part of the...
You would think so.
You'd think so, wouldn't you? What other things are needed to help renters, do you think? Balance it out, the choice of being either renting or...
Look, I don't want to offend all the landlords that are watching. The reality is, if you look at Australia's rental standards around the legal balance of responsibilities...
and ability to complain.
And landlords do have it pretty good in Australia. So there does, I think... And states are already shifting to try and redress that balance. And shifting, I think... And one thing we really haven't got our minds around is the idea of a 6 to 12 month lease. if you have a family and you're a long-term renter, that doesn't give you a great degree of certainty, does it?
No,
so
sure doesn't.
Availability of much longer leases, I think, is where we definitely are going.
Yeah, okay, another good point. What about overall rates? Because I suppose that's the other thing in terms of paying off your mortgage at the moment. We are in the most extraordinary place. So when I think of when I bought a flat, in the late 80s, 90s, 16, 17%, if you don't mind. And to think that you'd be paying 16 or 17% to pay off a mortgage, why on earth would you buy a house?
You actually needed a much smaller deposit.
Very small house, I might
You needed a much smaller deposit because not many people could save it. Now that rates are lower, the deposit is the part that causes you problems, but the repayments are less of an issue.
Yeah.
I think the structural fall in interest rates unquestionably has contributed to the housing affordability problem. There may be other economic reasons for why rates are low. I think if you're looking at housing, rates need to go up a bit as soon as the RBA can find the evidence to support that.
Really interesting contrast. Richard Yetsinker, thank you very much.
Thank you very much.
OK, and that's all for the show tonight. A rival of the ASX, Chi-X, will be speaking with CEO Vic Djokovic. Until then, thanks for your company.